Hey everybody, today is Saturday, the 24th of December, 2011. Let's take a look at these markets here. The S&P 500 did close above the 200-day moving average yesterday. For the week, we had a pretty good week actually for equities. The S&P was up close to 4%, Nasdaq 2%. We can see the semis gained 5.5% back, and even the financials were up 4.8%. The S&P 500 is now positive year to date by 0.5%. So we've obviously been jumping back and forth above and below that level, and the level that we closed last year was 125.75. So we're slightly positive for the year. We're slightly above that 200-day moving average, and this is the fourth time really that we've been above. The fourth session we haven't closed above it, but the fourth attempt we're at this 200-day moving average. And like any level of resistance in the market, the more times it's tested, the more likely it is to fail to hold the market back. In this case, where it's a declining 200-day moving average, we also have the the trend line off of the July peaks here that's come down, and we're right on that trend line as well. So this market has been, we've been seeing a tighter range, more attempts at that 200-day moving average, and it seems like it wants to continue higher. Now, of course, we had very light volume the last couple sessions. That's and people were complaining that yeah, it was up, but it was only up on it was up on light volume. And the point is, if it's up 4%, or if you're down 4% because you've been shorting it, thinking, well, this is a bullshit rally because it's light volume. Well, only price pays here again, and that's what we have to remain focused on. It wouldn't be a bad thing to see this market pull back a little bit first before breaking out. But what I wanted to point out here as well is the volume weighted average price year to date, and you'll see that this line starts to draw and up above, and you can see where in August where we broke down the VWAP also dropped down, and we're right now at about 125.10, the volume weighted average price year to date, and that kind of forms along with this prior level in here, that is last year's highs. It kind of forms this little band of resistance that we've been trying to poke through. And what we can see here, we're looking at a 65-minute chart right now, and that's because it gives us equal lengths instead of a each candle, that is, there's 6 candles over the course of one day, each candle being 65 minutes long, rather than looking at a 65-minute chart, or I'm sorry, a 60-minute chart where we have 7 candles for the day and they're of unequal value. But what we're starting to see here is what's looking more and more like an inverted head and shoulders pattern right at that 200-day moving average, with this kind of being, we could go like this and say, that this is basically the neckline as well. So we could take the height of this pattern, which is about, let's just call it 116.5. It's actually a little bit lower, up to the neckline, and we'll call that 127.5. So that's 11 points. Now, the measurement that we would be looking for on a break of an inverted head and shoulders pattern is the height of that, the bottom of the head up to the neckline. So 11 points basically is what we're calling it here. So we could say that, pushing past 126.5 should be leading to 127, 128. So I'm sorry, 138. So is that reasonable? And you look at where is 138 on this market, on this chart, and we'd have to go back to a weekly time frame to kind of see that. We'll just draw a horizontal line up at 138, and that's about right here. So just above what are the highs for 2011. So that's where that's a potential scenario that we have here right now, is that we're forming this inverted head and shoulders pattern. And when we look at this weekly chart, of course, we see that this prior bigger level of support has been acting as resistance in here, and a firm break above it could lead to a really nice rally. Now, you don't want to get hung up in that bullish call, that is, of an inverted head and shoulders pattern that's going to break, because we still have a lot of things to be concerned about here. Drilling down to a 30-minute time frame, this past week what we saw was, of course, we had that gap higher, and then we did get the higher low, and we spoke about this being an important higher low, that as long as we held above that 123 level this week, that it was intermediate term innocent till proven guilty. And that was a good way to look at the market, because obviously we had just a nice continuation higher. The issue here for me is that we're a little bit extended. We haven't seen a nice pullback the way we saw right here. This was a nice pullback to prior resistance. Now looking for a large breakout after this market's extended in price on lighter volume too seems a little bit unrealistic. Here's basically where we are. We've got a couple potential levels of resistance up above at 127, 127 and a half. But what would be ideal would be a pullback down towards 125 and a quarter, maybe 125 and a half. Make that nice higher low. And of course, we're still held hostage to all these headlines out of Europe and the rest of the world. So it's tough to really buy into this bigger inverted head and shoulders pattern that could possibly lead to a big rally. But it's a scenario that we need to be aware of. You always have to be aware of any scenario, and no matter how unreasonable it may sound, it's good to be aware of what the potential is. So next week, what we want to see is a higher low somewhere, maybe about 125 and a quarter-ish, and then be able to continue to move higher beyond these little peaks and and hold above and close above. If we close each session next week above the 200-day moving average and finish out the year above there, I think that would set us up, semi-positive going into 2012. The Nasdaq still kind of a mess in here, and we can take a look at the volume-weighted average price year to date in the Nasdaq as well, and we can see that we have just exceeded that level again. So here's where we are, basically at about $56 a share, and it's been a choppy back and forth. In particular, the second half of the year, this is where we've encountered all these gaps. The Nasdaq, as we know, wasn't as strong this week, but we did hold above this prior low right in here, so that was good. And then we had just kind of a steady recovery throughout the last 3 days. Last 2 days really, because it was 3 days ago that we gapped down, but it did make a nice improvement. And the level that we've really been watching closely in here, of course, is that 56 level, and we just managed to squeak above it at the close. I don't like I said, if we got to close above 56, I don't think that means you got to run out and get bullish because we're above this magic level. It's just not that simple. But it's good to see that on a closing basis for the week that we did get above that. What would be nice to see in here is maybe some continuation up towards the top end of this trend line, up towards 56 and a half, and then next week to be able to hold at least above 55 and a half. I think 55.60. If we pulled back below 56, I don't think it would take the steam out of this market. But if we pull back to 55.60, we've got a rising 5-day moving average. I think that would be a good place to create a higher low, and a little bit of doubt as well in people's mind that it's back below 56, it's going to completely fall apart. So if we had that pull back down towards 55 and a half, I think it would create some doubt. But if we held above that 5-day moving average, made a higher low, that would set us up nicely, I think, for a break of this downtrend line, and perhaps up towards about the 57 and a half, 57.70 level. Russell 2000 had a good week as well, and this market really is in my opinion holding up better than the other markets. We didn't have as deep a pullback in here. Now, of course, it wasn't looking so good after Tuesday's close, and we'll take a look at that in here. But we did get that gap higher. We held above that 73 level for the, at least on a closing basis, and we got our higher low in here that we were talking about as well. So the Russell 2000 had established a nice higher low, and then what we saw is that this prior resistance near 74 from earlier in the week is holding as support. So 74 seems to be an important level right now for the Russell. A little bit deeper pullback towards 73 and a half wouldn't be a real big concern. But what we see now is that this is the first close above the 150-day moving average since back in late July, and this is this 150-day moving average has been pretty important to it. So if we continue to move higher from here, then I think we have to look at what are the potential upside targets, and you can see in here that this 75 and a half level was basically the recent highs, and we can kind of draw back to that that a little bit and see we had this gap here at 76 as well. So 75.5 to 76 looks like a logical place, and that's really right about where we have the 200-day moving averages at 76.40. This market as well has really kind of obeyed this volume weighted average price. You can see that excuse me, as it draws apart, that's approximately where we are year to date as well for the average price of the Russell 2000 is right up about 76. So I think 75 dollars and 70 cents, basically up in this area, up to the 76 level, and even as high as the 200-day moving average seems as though where this market might be headed, as long as again we kind of hold 73.5 to 74. The financials had a good week as well. They were and they finished positive yesterday. 1280 has been the big level to watch in there, and obviously we closed above that 1280 level. Here's where it comes across on the chart. We've got this similar type of triangle. That we're right up against the upper edge of that. We have this as a prior important area in here as well at about 1340, and then above that we've got the highs for the second half of the year near about 1420. And the interesting thing there is when we take a line and draw straight across as a volume weighted average price for the year, we're basically right there at 1420. So 1420 is still a good distance off, and we can make the same argument that we got a little bit extended in here in the financials. So maybe a pullback, hopefully not as low as 1280 at this point. I think that 1280 has been battled enough that if we were to hold above even 1295-ish to get a higher low around in that area, that's where we'll see this rising 5-day moving average come into play as well. Then I think we can start to look at this as what are our upside objectives in these financials. And the first level would be right in here at about this $13.40 level. It's been resistance a couple times, and here's our higher low. If we get beyond that, well, then the next objective would be about 1365, and then this gap area would likely prove to be a level to pay attention to at 1380. But eventually, I think up near 1420 does seem realistic. Now the daily chart, we're really just seeing a compression of range in here, not necessarily something so bullish. But when we look at the intraday action, it is showing better construction of trend and the possibility that we could continue to move higher. So it just seems as though the path of least resistance in the intermediate term for these markets is higher. It's still within an overall damaged structure. I mean, look at these semiconductors. Yeah, we closed back above that $30.50 level that's been so important, and we closed above that 50-day moving average, but this is still a giant mess in here. We still have these trend lines, that downtrend line that's been in existence here since, we could take it off that mid-November high, and we're right up against that. So if we were to pull back down towards 30 and a dime, I think that would actually be a good scenario for the semiconductors, because then people would be kind of freaked out. Well, we're back below 30 and a half. That was the key level. But if we pull back down towards 30 and a dime, find some support near that rising 5-day moving average, then not the financials, but the semiconductors could be poised for a run up to the next important level. Well, first of all, we've got this had been a little bit of prior importance assigned to this as support at 30.80 and resistance there, but then above it is $31.50, and I think those look like reasonable levels. The 200-day moving average even is obtainable up near 32. So in all of these markets, I think it would be nice to see a pullback. Tuesday, maybe Wednesday, then finish out the year strong. It's going to be a quiet week in terms of volume in all these markets, very similar to what we've seen in the Russell, in the S&P, and the Nasdaq the last couple days. We've got a holiday shortened week ahead. The next 2 weeks we have 4 days, and if I'll just say Merry Christmas to everyone. If you don't celebrate Christmas, then enjoy your extra time off, and we'll talk to you next week. Thanks.